Good morning, my name is Christelle from France de Klerk, Independent Technical Analyst. Quite a few requests for some American shares. Intel Corporation is the first one on our list, listed on NASDAQ. It's nicely overbought on the stochastic. We've got a negative divergence with that blue line breaking downwards through the orange line. What does that mean? It means the probability for the instrument to pull back to lower levels is more likely. And more important, last week's candle is a beautiful shooting star candle. A candle appearing at the top of a rally with a long tail at the top, implying that the selling pressure was on last week. Now the negativity will obviously be confirmed by this week's negative candle, but the first sign of weakness on Intel was already below $37, this low was below $37.62. Below that level, the first sign of weakness was confirmed or on the table, but above the high of $40.07, we can assume again that the momentum to the top can continue. So with that overbought stochastic, maybe one can consider taking some profit at this stage. And then obviously the long-term sentiment towards Intel is still positive, with that 40-week moving average being a support. Visa. Quite interesting that we've had a request for Visa and MasterCard this week. Visa, we can see again an overbought territory with a stochastic that has broken down, with the negative divergence was confirmed with that blue line. That means the probability for the instrument to increase to higher levels is more likely. Now for the last 4 weeks, the share has basically consolidated sideways and we saw some profit taking. But this week, but in the week that the candle in the week of the 5th of September is the one that I want to highlight, because that is a possible hanging man candle. That was the first hint to say, listen, there might be some weakness and that the massive rally that we've seen might be coming to an end. And the negativity of that hanging man candle, I mean, it's self-explanatory, was confirmed by the following bearish, in that case, bearish engulfing, bearish belt hold line candle. That was the indication and the confirmation to say, listen, the top is here in place, might consider taking some profit. Only when the share starts to consolidate above $250.06 again can we assume that the momentum to the top will continue and that, it will be hands on board again and flying like an aeroplane. The stochastic is also saying a possible pullback, right? And then obviously more weakness will be confirmed below $238.75. MasterCard, or a share listed on the New York Stock Exchange, and this one has got a possible, again, hanging man candle from last week. Now the negativity about this candle will only be confirmed when the next candle is a bearish type of candle. Now remember, these are weekly graphs, so every candle represents the price action of that week. Again, very overbought territory on the share, which means that elastic band is stretched to a side and that it can easily retrace to lower levels, which makes the probability for a pullback more likely, especially when that blue line starts to break downwards through the orange line. But if I look back, we can see, MasterCard is at record highs at the moment, but it will be interesting to see if, like in Visa's case, if the hanging man will be confirmed by the following bearish type of candle. Exxon Mobil, with the oil price where it is at the with the oil price where it is at the moment, these shares are flying and obviously very overbought. I don't have confirmation of a negative divergence yet, but that blue line looks like it is losing steam and is very keen to break downwards through the orange line. Once that negative divergence takes place, the confirmation of a pullback or profit taking will be on the cards on the stochastic, and we combine that with the candle. Now last week's candle was a clear spinning candle. small, relatively small real body with shadows almost the same in length on either side of the real body. And that tells me indecision. That tells me they were not sure what they wanted to do with Exxon Mobil. And more importantly, this high of last week, let me just switch on the crown. This high is a little bit lower than these highs, and that is seen as negative. Only above last week's high, which is waiting at $118.66. Only above that level can we assume again that the momentum to the top will continue. My first sign of weakness on a weekly graph for Exxon will be confirmed below $113.57. What is positive is the fact that my 40-week moving average is still a support, $109.76. Some investors would want to wait for that support to change into a resistance first before they take some profit. Now, if I change this same graph to a line graph and we assume the share finds resistance here, we might be sitting here, and I want to draw this horizontal line in here, with an ugly triple top formation. First head, second head, and assuming we find resistance here, we might be sitting with a third head of an ugly triple top formation. Now, the negativity and the warning around this triple top will only be confirmed once that support at $100.94 changes into a resistance. All right? Not before that. So assuming once the share starts to trade above these highs again, the warning of that triple top will be off the table. It becomes obsolete, and I say the share can reach for a brand new record high. We can see that the 40-week moving average is the red line, which is represented by the red line, is a critical important level on this graph and should not be disregarded. Once Exxon starts to trade below $109.76, the orange lights will start to go off to say, consider taking some profit. You might see the share at lower levels in the near future. Because if we go back to the history of Exxon Mobil, we can see that the 40-week moving average is a very strong support here. Look how it supported it in the past. And again, when it kept it a resistance, it kept it a resistance for a very long time. Only back here in 2020, when it started to test it, kept it a support, it moved from strength to strength to strength. So the $109.76 is a critical level. To keep in mind, below that level, as I said, the orange lights would start to flash for Exxon Mobil. Don't forget to send through your request for next week's show. Have a fantastic week. Take care.